Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management. In the FANG Olympics, two of the stocks are 1 and 2 in the race to the top, and the question is now, what do we look for? Well, what happens when an unstoppable force meets an immovable object? We're about to find out with our two leading Phantom FANG portfolio stocks, Alphabet and Facebook, which have been happily surging towards a major SVA breakpoint, their respective bubble prices at 7.4 times book. But before we take a close look at the FANGs, as always, I do like to say thanks again to everyone who likes this video and all our subscribers. We really appreciate every single like. Okay, let's start off with the Alphabet, and Alphabet has virtually met our target. In fact, it got within 2% to 28.99, I think, or 97 or something, just the other day. And that is all that I have been looking for in this company. And the reason for that is that if we go and take a very long look at Alphabet, we'll see that it's been more than 10 years since this company was trading at a higher valuation than its bubble price. Okay, and that when the stock was young and growing a great deal faster. Since that time, you'll notice that the growth rate has been very steady, very flat, and it's only recently that the valuation has actually got well above its fair market value, which is that dotted line that you can see. So this is by way of somewhat of being an extreme valuation for the company. And not to say that it can't go higher, but it will have to break out, and given its I guess its valuation metrics, it makes me wonder if it's even possible. Facebook, somewhat the same story. It's coming up to its own bubble price, and of course we know how significant that is, because if we look back in the last 3 years, of course, we will observe that the stock peaked there in 2018 and again in 2020. So this is reaching definitely a valuation extreme. Now, you'll see from the dotted line, which is the fair market value, that it's been moving up fairly quickly lately, but the last time it was as high as it is relative to the current price was way back in 2018, and that was the peak for the stock. Now, turning to Microsoft, I would have to say it's steady as she goes. Downside risk, I think, would be probably to its HB2 in any kind of short-term market setback, but it appears to be just kind of soldiering steadily on. Amazon, however, now is the really interesting issue. Remember, I think I showed you last week, I got this, I hope you can see this very faint dotted line here. If you were a kind of a standard technical analyst, you would look at that and you'd say, look, this company appears to be breaking out over a high that's been the high for the past year. Okay, and there it was. However, what happened this morning when the company reported not bad earnings, but less than hoped for, and they reported that they were expecting slower growth ahead, and the price immediately plummeted, not only down from its HB3, but also through that technical line. Netflix, well, you know how I feel about Netflix. It's a great company, but its valuation, I think, is the issue here. And without extraordinary growth, I think this company has a very, very difficult time actually not only going higher, but actually preventing itself from actually going lower, because the fair market value at the present time, as we measure it, is 61% lower than the current price. Apple banged right up against its HB5 as as we thought it would about, I think, 4 weeks ago. I said, well, this could easily happen. But since that time, it's been unable to get any higher. And of course, with Apple, when we look at the growth looking ahead for the next 2 or 3 or 4 years, it appears to be very, very slow. And the issue is, can it get any higher, given the fact that it's already at 26 times book value? And finally, Nvidia. Well, Nvidia, of course, really kind of took off rather early, rather than giving me a nice buy signal, which I was looking for. Took off rather early and had a nice run, but it kind of curled over and set back right to its HB4. So it took some of the bloom off that unexpected rose. Now it's bounced from there, but the question is, what can it do from here? And of course, last week we reviewed what's going on in the semi-industry, and being very bullish in this group is I would say, is difficult. Now, in summary, here's where the physics of the stock market gets interesting. We have 2 key FANG stocks, Google and Facebook, reaching a critical breakpoint level, their bubble price, or 7.4 times book. Both of them, of course, also happen to be the 2 cheapest stocks in the group, although largely because they're the slowest growing and least profitable of the group when you examine their valuation metrics, that is, their return on equity and 5-year balance sheet growth. So, can price momentum and a still rising stock market push them higher? To be announced, I think. Alphabet got to within 2% of its bubble price, although Facebook has further to go to reach its usual all-time valuation high for the 3rd time. For my part, I will delete them from the Phantom FANG portfolio at their respective bubble prices and only re-enter them if they showed that they can break out from here. Last week, I reminded everyone that this is the reporting season. And I said you will want to stay tuned to see what impact the new FANG balance sheets have on their valuation and their outlook. Well, we have one answer right now as of this morning. Amazon is, or was, really interesting. It was right up against its HB3 and looking like a possible breakout over that key resistance level due to the fact that it had already broken out on a pure technical analysis basis. Last week, I observed that investors would have to wait and see if its fundamentals could move the stock higher. Otherwise, it would remain outside the pale of the Phantom FANG portfolio. Well, this morning, we got our answer. The fundamental outlook is slowing, and the stock has backed off sharply. As an aside, for those not convinced of the forecasting power of SVA versus standard technical analysis, I think that you can see that SVA definitely had the upper hand by far in terms of rendering a useful buy signal. Netflix also had a perfect hit at its HB3 and setback. As I said, I remain for Missouri about their longer-term growth outlook and hence the current valuation, which is, by the way, more than 60% of its fair market value as we measure it. Apple had a perfect hit at HB5, 26 times book, but so far has backed off, possibly waiting for their second quarter numbers to come in. Again, however, It's not the short term, but the longer term slowing outlook that really concerns me at this valuation level at 26 times book. Wow. Finally, Nvidia backed off smartly, right down precisely to its HB4 price, but has since had a 10% bounce. Last week, I showed you one advantage of the SVA service: having a quick and easy yet very thorough industry comparison when we looked at 6 other semiconductor stocks in 3 minutes? Not to put you off your dinner, but if you happen to own Nvidia, by our measure of intrinsic value, it suggests that the stock is some 66% excessively valued. And that leaves Microsoft still safely and comfortable in the Phantom FANG portfolio, although its intrinsic value was nothing to write home about either. Now, what are your takeaways from this week? First, we have 2 FANGs near their bubble prices, which may be their top, and 2 FANGs at their HB3 prices, that's 16 times book, which may also prove to be their long-term top. Now, the last 15% upside for the overall market may change the shorter-term valuation dynamics of all 4 of these stocks and allow them to push higher. But the FANGs do not look to be the dynamic leaders that they once were, and I think the risks in the group are rising. Still, with that market peak still being a comfortable 15% away, we really don't have to worry too much about the shorter term, although so I would not be strapping on my parachute just yet. Finally, I want to emphasize this. With 15% or so still left to go for the overall market, I cannot rule out the possibility that Google, Alphabet, Facebook, and Amazon could still break out and give us a buy signal. So mark down those breakpoints and don't be caught flat-footed if one of or more of those does break out and make a run for it. For now, this has been Ross Healy, Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.